go to Nadia El Bilassi. She is an analyst at Equiti Group Market, and she joins us now from Dubai. Thank you for being with us today. Nadia, in general terms, what happens usually in the US in the lead up to the presidential elections? And I'm speaking in terms of the volatility in the markets, in the stock and in the bond markets.
So leading up to the elections, we usually see a 9% uptick in the stock market. However, this is based on historical means whatsoever. It's not a guarantee that this will happen, but usually the markets continue on with the overall trend that we're already witnessing. They continue to go in that direction. So now that the markets are going upwards, it is normal for us to see that leading up to the elections that we can see a continuation of this upward trend. And for bond markets, I mean, it depends on the fundamentals that are happening in the markets right now. We have treasury yields going lower, so we have the dollar going lower. So that's why we're seeing lower volatility on bonds. But for equities, we're seeing more high volatility.
I get it. That's interesting. You say nothing much would actually happen right now. It would just continue the way things are in the stock markets, especially. Do you think it would make any difference whether Biden will win or Trump, and how would stocks then behave? We did see stocks rallying in the first Trump presidency, really, and they were really euphoric. What do you predict?
I mean, historically in 2012, 2016, we didn't really see any major shift in the stock market, whether it's a Democrat or a Republican tenure. So it also depends on them, but historically there hasn't been any changes to both parties. But we could see that obviously with Trump being back on in the elections, that we could see a higher volatility definitely with Trump being on the elections. Yeah.
Right, higher volatility. And if Trump were to win, again, the narrative, America first, would it help or would it hamper trade? Or on the contrary, would it stimulate further growth? Because one thing we can say, the US economy right now is very strong indeed.
Yes, the U.S. economy is very strong. I mean, throughout Trump's election, unemployment was around 6.7%. Now it's 3.7%. So we are seeing a drawdown of unemployment in Biden's terms. However, the more that we look into it, we have GDP now obviously growing, but also as markets expect lower interest rates. So with the lower interest rate cuts, we are expecting a hotter stock market and as well as earnings. So when Biden comes in and he raises tax for corporations, that will not play out well for the stock market.